Did Donald Trump just change the United States economy again? Yes. The answer to that question is yes. Did he, in fact, avoid an economic crash? Well, we're going to try to answer that question today. I'm going to be showing you exactly what he's been doing and how it's related to the gold standard and potentially revaluing gold and even related to the crypto market. So, the US Treasury note interest rate has been showing an upward trend over the last several years with a few occasional dips. So, this graph right here is a 10-year Treasury note rate, or sorry, yeah, and it's the last 5 years for the 10-year Treasury note rate. So, one of the potential risks with rising Treasury yields is that it increases borrowing costs across the economy, which could potentially spell an economic collapse because when people can't borrow money for their businesses or they can't borrow money to buy a house, things slow down, the growth decreases, and eventually you can wind up with a crash. Okay, so higher yields mean the government pays more to service new debt. So here's the other part of that problem is that if the government's continually borrowing money through these treasury bonds, they've got to pay that back, right? And obviously, we've got a $35 trillion deficit right now, which is just insane. But eventually, they have to pay it back. And the higher those percentages are, the more interest we're paying every year out of our budget. And that could also spell economic collapse through various forms like increased tax hikes, spending cuts that we can't afford, things like that, different things that we're not able to do. And so Trump has demanded that the interest rates be lowered because he's trying to keep things running smoothly. And it's not. He suggests that they should be 3 points lower than they are right now. What has he done to try to fix this problem? Well, we're going to dive into that. Before we do, you're watching Filibusted. My name is Troy Black, and we recently canceled our exclusive content. So if you were an exclusive member on YouTube or Locals, we ended up canceling that. It was just taking way too much of our time for what it was, what we were able to get back from that. And so we apologize for any inconvenience, but if you did sign up and you did prepay for that, you should get refunded like a prorated rate of what you paid with the amount of time that was left. So if that doesn't happen, please let us know. But if you do want to help support this channel, you can still be a member for a smaller tier, which all you get is essentially a sticker saying I'm a member. And you can sign up for that on YouTube if you want to do that. But this is the story that we're getting into today. So I'm super excited about this. Many people have seen that a federal judge just blocked Trump's tariffs, or is trying to block Trump's tariffs, saying that they're illegal. And so essentially we're setting up for a potential legal showdown between the Trump administration and this judge. So the ruling is not actually going to take effect until the 14th of October. And this gives his administration time to ask the Supreme Court to take up the case. So they're going to try to appeal this, and it should be appealed because this has come after Trump has already brought in around $15 trillion in speculative investments into this country since he was sworn into office for this term. So we've seen so far that not everything that he wanted to do with tariffs has taken place, but we've seen the effect of tariffs, which happens to be increased economic growth and bringing production, manufacturing back to the United States. So Trump is setting us up for an economic boom. And whether you like Trump or not, if you can't see that what this judge is doing is purely political, then you need to read the story again, because it's just so crazy. I mean, even tariffs have totaled $142 billion by July of this year, which is more than double what it was the year before. So that's $142 billion issued back into our budget. And I'm not sure about the source here, but Scott Bessent, I've heard recently, said they're trying to funnel that money back into paying for the deficit, paying down the debt. So Trump is heading this needle in the right direction. And the only reason for a federal judge to stop these tariffs, to try to block these tariffs, is because he hates Trump so much, or they hate Trump so much, that they're willing to sacrifice the good of the American people just to try to get at Trump, which is very sad. It's a very sad thing. And I'm not saying Trump has done everything right. I'm not saying all the tariffs have done everything he said they were going to do. But what we've seen is that Trump has made all these trade deals with all these nations, and these tariff trade deals have been settling one after another. And so we've seen that we've landed in a good place financially. and he's setting us up for a huge economic boom. And some people just don't want to see that happen because they don't want to give Trump a win. So very interesting. I'd say let's get back to celebrating things that work instead of only celebrating things that our side is doing. That would be a nice change of pace. But was this actually legal? Well, let's look at this. Okay, so they're saying it was illegal, but the Trump administration has argued that courts approved President Richard Nixon's emergency use of tariffs in a 1971 economic crisis. So obviously he's saying there was an economic crisis, and that's why he's instituting the tariffs. I would say $35 billion deficit or $1 trillion deficit. Excuse my complete missing the mark there. Obviously, there's a huge difference. I mean, imagine like somebody saying you owe $35 billion, right? That would be like out of this world, insane number. We owe $35 trillion. I would say this classifies as a economic crisis, right? And so they're saying Richard Nixon did it in 1971. We should be allowed to do it today. But here's what happened is in 1971, an economic crisis arose from the chaos. So why he had to institute the tariffs was because there was chaos that came after he decided to end a policy linking the US dollar to the price of gold. Okay. So this is interesting because we see the same things playing in today that were happening in 1971, but it's the opposite. We're seeing, so there's a lot of rumors involving gold and the revaluing of gold and how that's going to play into this story. We're going to see in a few minutes. But in 1971, President Richard Nixon's decision to end the Bretton Woods system by suspending the US dollar's convertibility into gold, it happened on August 15th. And this move effectively unlinked the dollar from the gold standard, causing a type of economic crisis. And that was why he had to, move over to tariffs. And so one of the reasons why he did this, though, there was several different reasons, but one big reason was because foreign governments, particularly France and the UK, began doubting the dollar's ability to maintain its gold peg and started redeeming dollars for gold, draining the US gold reserves. So what they were doing was they were saying, okay, the dollar is pegged to the gold. We don't think this is going to last. And so they started saying, here, you can have the US dollars back because we're betting against the dollar. We want the gold, right? And so it was draining the gold reserves, and he decided to step in and do something. Obviously, may have been not the best decision, but who knows? We'll see what happens this year regarding that same step. But the opposite. So here's what happened. Let's look at what actually happened. Okay, so he's trying to fight inflation. He's trying to fight certain things that were going to happen, and well, I'd say he caused it to happen more so than stopped it, because what happened was the plummeting of the value of the dollar. And we see this is 1980 here. So that's starting around 1971 right there. And we just see like it's slowly increasing, and then a lot of just sharp increases all the way up till 2020. And obviously that was COVID, and then this section here was the last 4 or 5 years. So there we go. There's this sharp increase since 2020. In inflation. Many Americans and others around the world have been affected by that increase. So very interesting situation that we're in now. And we're not just facing the fears of inflation, we're facing the aftermath of inflation. But when Richard Nixon did this, it started the era of fiat currencies, where money's value is based on trust in the governments rather than on a physical commodity. Okay. Many people are asking the question, could we go back to a gold standard? Could we go back to tying our money or pegging our money to something of more value than just, well, trust us, it's going to be okay. We're gonna make it okay. We're gonna try to keep things from going under, right? Because we're the American government. Listen, I have a lot of trust in America itself. I would back America if I had to, but not as much trust in some of the corrupt officials in the government right now. So let's see how gold plays into this story. And we're going to do that right after a message from appropriately our gold related sponsor today. Investing can be confusing and scary, but it doesn't have to be. Genesis Gold Group takes the guessing out of the game and guides you on your gold investment journey. We at Filibusted love the genius design of the prepper bar, which breaks up into sections, kind of like a chocolate bar. But if you prefer high security insured gold storage, they have that too. And unlike Fort Knox, the gold is actually there, 100% owned by you. So don't wait to get started. Visit filibustedgold.com today for a free investment guide from Genesis Gold Group. So thank you, Genesis Gold Group. Y'all can go to filibustedgold.com to get a free investment guide from them and find out more information about that. Thank you for your sponsorship today. There may be a reason to buy gold. We're going to look into some of the potential, some of the things that could be happening with the value of gold very shortly. But there is a floating option to revalue gold. Many people have proposed this. Some people think that it's bound to happen. Some people think that a leak has happened. But I'm not sure about all that. We don't have the actual data or the facts to back that up. So it's just a rumor at the moment. But it could definitely happen. We'll see. But here's the thing. The U.S. Treasury claims to have about 260 million troy ounces of gold. And since they're troy ounces, I will be reclaiming those since they're mine anyways. That's a stupid joke. But the gold held by the U.S. government is still valued according to the value assigned to gold in 1973. So this is very interesting. The gold is actually valued. The gold that we have in the U.S. Treasury is valued at $42.2222 per ounce, which is way undervalued when it comes to the market value, which currently, as of today, when I looked it up, was $3,531.18. So it's probably changed since then if you're watching this video a little later. But apparently we're still treating the gold that's in Fort Knox or wherever it is, if we actually have it. Obviously, that is another side of the story. But we're still treating it as if it's valued at $42 an ounce, when really it's valued over 70 times that, right? So there's a difference between the book value and the market value. And some people have proposed, well, Trump, just revalue the gold, right? Revalue the gold. And what that would do is it would make it to where we would have to print a lot of money to make up for the difference between the book value and the market value. And it would push a lot of cash into the market. Essentially, it would push a lot of cash into the government's hand to be able to try to pay down debt or pay the bills for the year, whatever it is, right? And so some are saying that Trump could revalue it as high as he wanted. So not just to $3,500, but to $5,000 an ounce or $15,000 an ounce. It's been proposed up to $15,000 an ounce, which would raise $4 trillion in cash right now. So that could look like a big win for Trump. He could raise $4 trillion, boom, throw that at the national debt and say, hey, we just cut down more national debt than anyone ever has before in a short amount of time, whatever it is. But the problem with that is it might erase a portion of the debt technically without raising taxes or cutting spending. But we would simply be printing money, right? And so it's also going to hurt inflation drastically. But it might be a good thing for gold holders, those who actually have invested in gold, and it could cause gold prices to surge drastically as well. So there might be a benefit there for those that do hold gold and are betting on that. So in 1934, the Secretary of the Treasury issued gold certificates to the Federal Reserve for the amount of gold transferred at the then applicable statutory price for gold held by the Treasury. So we would be, if he revalued it, we would be essentially be updating that price, and money would be passed between the Treasury and the Federal Reserve that has not been yet passed, right? And all of a sudden we'd be like, yay, we got all this money. But I mean, it would be the same feeling that you get when it comes to the American people and the economy. It's the same feeling you get when you go down to your credit union and you take out a $5,000 loan and you go, yay, I got all this money to pay my bills this month. But now you're in debt in a sense. So the government would be getting out of debt, but it would be hurting the American people, right? So let's look at this. There's another theory out there, and this has been proposed. This is very interesting. Federal Reserve notes have not been redeemable in gold since 1934. So that was the last time you could turn in a note and get gold back, right? And I've got like I'm a coin collector at heart. I haven't collected in a long time, but I still have a small collection that my kids will take out and destroy every once in a while. And so the value is not going up, obviously, but I have some of the silver certificates, like dollars that where it says redeemable in silver, like you can turn it in to the government and they'll give you silver for it, right? And the same was true for some certificates when it came to gold. You could turn it in, you could get your gold back, and that was the gold standard. The dollar itself could be redeemed for gold. So that hasn't happened in a long time, and I highly doubt that that's going to happen. There is a proposal to go back to the gold standard. There's a lot of issues there. There'd be a lot of specific details we'd have to cover, and I'm not going to talk about that specifically today. But I do want to talk about one thing that has been proposed. So economist Judy Shelton, some of y'all have probably seen this. She came up with an idea. I don't know if it's her specifically, but she proposed it back in 2024. She proposed a 50-year treasury bond convertible into gold. And the proposal was that it would be initiated on July 4th in 2026. Some people think that's going to happen. Some people think that this is bound to happen. But the aim of this would be to potentially stabilize the dollar and allow lower interest rates on long-term debt. And that would keep the government funding going. That would keep the economy in check. That would keep the mortgage rates and the corporate borrowing rates from going up. And that would hopefully keep us from an economic crash, right? This would allow the government to raise cash now and not have to pay interest on it, because what it would do is, for instance, like if I bought one of these treasury notes from the government for a certain amount of money, a 50-year note is just insane, by the way. Who's to say I'm going to be alive in 50 years? I don't know. You know what I mean? So there's that to consider as well. But if you buy one from the government, they're going to say, okay, at a certain amount of time, we're going to give you gold back in exchange for this, right? You can redeem this for gold. And probably there's some sort of way you can redeem it early for less or whatever. Okay, so I could be wrong about that. But they don't have to pay any interest on that, because they're essentially betting against the dollar, and they're saying, well, you're going to have gold and it's going to maintain its value, and you're also betting against the dollar, and you're saying, okay, I don't care about making a bunch of money off of this, making a bunch of interest. All I care about is keeping my money secure and keeping it from deflating in value. So I want that gold at the end of that time, and you're also betting on the idea that gold will be worth a lot more at some point. And maybe that it's a lot more rare, a lot more harder to get, whatever it may be. And so it's an interesting theory. Y'all let me know what you think about this theory, especially if you have more information about it or you know more about it, you've read about it. Let me know what you think about this in the comments, especially after the video below. But here's a couple of problems. What happens when all of those notes come due? Do we pay all of our gold out? the gold reserves get empty then? The same thing that Richard Nixon feared, in 1971. Doesn't seem like a great plan to me, unless now I'm going to jump into some speculation here. Here's a conspiracy theory, which says that we potentially have a secret gold stash hoarded away that nobody knows about except for the government, certain people in the government. And I've seen a couple theories like this. So that's interesting. So if something like this were true, then we could essentially raise a bunch of cash right now, have a bunch of extra gold to pass out later, and still keep our reserves, and everything would be kind of hunky-dory, right? And that's an interesting theory. Probably don't want to bet too much on that, just because it potentially could be untrue. Another theory that comes out of this, or another thing that could happen, is what if the government knew about a plan that it had to get a lot more gold, like let's say make some sort of agreement with another nation saying, hey, we're going to come mine for gold. We're going to, some sort of security agreement or something like that. If that's being set up in the background, the back end, and they sell a bunch of gold treasury notes ahead of time, and they raise a bunch of cash, they could essentially be cashing in on something they knew was going to be an attainable asset later on. That's interesting theory, but obviously that's speculation as well. There's also the Gold Standard Restoration Act, which was introduced by Representative Alex Mooney. It proposes tying the dollar to a fixed gold weight within 30 months, with Federal Reserve notes redeemable in gold. So there's another, I'm not going to get into that, but y'all can go look into that for yourself if you want. But what is Trump's, what I would call his new gold standard? Okay, so now we're going to be getting away from gold for a second, okay? Because here's the thing about gold. Gold is always going to be valuable. It's always going to be worth money because people value rare commodities. People value rare resources, earth minerals, things like that. And, it's beautiful. You can make things out of it, make jewelry. You can, it's throughout time, people have valued it as different cultures, different societies. There's always been a trust in gold to an extent. Okay. So maybe gold is not the answer. Maybe it's not. And maybe the answer is figuring out, what do people value today? And where is the shift going when it comes to what people value? So the fear is, well, if people lose trust in the American government or in the dollar itself, how do we stabilize that, right? And gold would, a gold standard would stabilize that, but it could also create a lot more issues, a lot more problems. Well, here's something that's interesting. What passage of the Genius Act means for stable coins. So one thing that, and bear with me for a little bit, I'm not saying stable coins are the same thing as gold, but one thing that we've seen is this trend economically and socially toward cryptocurrency, digital currency, things like that, and stable coins falls under that umbrella. So one of the things that Trump did recently is he signed the Genius Act. Many people have heard of some of the things that did. It did a lot of different things, but I want to focus on one specific thing. One thing that it did is it regulates the use of stable coins, which are pegged to the value of a national currency, most commonly the US dollar. And they're redeemable on a one-to-one basis. And they've got certain things in play to keep that from moving too far away, up or down from whatever it's pegged to, right? Now that there have been times where that has the peg has failed. That has happened in the past, but hopefully we've learned from that. But they're redeemable on a one-to-one basis with either that currency or another high-quality liquid asset. So some of these assets are, and some of the things that this ties these stable coins to are demand deposits, short-term U.S. Treasury bills, notes or bonds, repurchase agreements backed by Treasury securities, money market funds invested solely in what I've just mentioned, Treasury bills, notes or bonds, or tokenized versions of these assets. So what does this do? What is this doing specifically? So we talked about how what's the issue that Trump is trying to fix or correct, right? Is if the interest rate goes too high. So let's go back to this. This is the last 5 years. This is the 10-year note interest rate for Treasury notes. Okay. And if it gets too high, and if it spikes, it increases the borrowing interest, typically, usually increases the borrowing interest around the nation for things like home mortgages, things like business loans, things like that. And it can cause a growth or a collapse in the economy. Okay. So we do want to avoid that. Trump's been putting a lot of pressure on the Treasury to get these rates down. He's gotten a lot of pressure back. Right. So what did he do with the Genius Act to try to lower? Well, let's see what happens here. Okay. What this does when you essentially what they did was they said, hey, there's all these different stable coins. There's not too many of them, but there's several. And most of them right now are tied to the US dollar. And when you pass a law saying you've got to tie these stable coins behind the scenes to US Treasury notes, bills, or bonds, you essentially what they're doing is they are forcing these companies that offer the stable coins to back the US Treasury. And they're forcing the Treasury market to get bought up. And what happens when the market gets bought up is the interest rates typically go down when the market gets bought up because there's more of a demand for the bonds, the bills, the notes. And when there's more of a demand, you don't have to increase the interest rates to allure people to come buy more of them, which is what we've had to do. And so very interesting. Now, a couple things that I'll say. The Genius Act does not mandate that all stable coins must be pegged to the US dollar, but it assumes that most of them are, and most of them are. It does not mandate the stable coins must be backed exclusively by Treasury notes, but it gives a list, and most of the things on the list are somehow tied to Treasury notes. So this is interesting. I mean, this is like obviously I am not a financial expert. I'm not an economist, but just looking at this from what I do know, I would say it's a pretty good short-term strategy. That's what I would call it, a short-term strategy. Because what's going to happen is it's hopefully going to keep that interest rate from going up, or it's going to cause it to go down. And that's going to at least keep this machine moving forward until we can fix some of the bigger, more major issues, which is what Trump is trying to do with a lot of the things he's doing, including the tariffs. So this highly encourages the purchasing of U.S. Treasury notes, which creates demand for Treasury notes, keeping the interest rate down, which regulates the economy to an extent and gives the government the funds it needs to keep functioning. So we see that right here. The Genius Act could have interest rate implications. Here's how. So this is very interesting. I'm wondering what the stablecoin issuers, they're the ones being forced to put the money into the Treasury, essentially. I'm wondering how they feel about it. I didn't look into that. I'm wondering how that specifically works. I looked a little bit into that. It looks very detailed, very complicated. There's a certain amount of money that has to flow, I think, within a month's time of when these assets are bought, when the stable coins are bought. I mean, they have to show that every month, like that they're actually putting that money into it's very interesting, into the reserves. But here's what's crazy about it is this is why I say that Trump he's trying to reshift the target towards where the value is. What are people valuing now, right? So we know the crypto market is exploding, but and stable coins represent a certain percentage of the crypto market, but they say that the stable coin market itself, not the crypto market, the stable coin market could grow to a $1.6 trillion value by 2030. So if it keeps going, what does that mean? It means more money is going to be funneled into the U.S. Treasuries, and those interest rates stay low. And what does that mean? It means every year, the government having to pay back those loans with interest. Guess what? It means we save money on how much interest we're paying every year. The higher these interest rates go, the harder it is for us to pay off our debt in the long run. And so Trump is looking future focused, not just this year. He's looking forward and he's saying, hey, we're trying to solve the national debt, and that means keeping these interest rates low. And so we're going to do what we need to do to be able to make that happen. And he's focusing on what do people value now? And what we see with the trend is people are starting to value, and the trend is pointing towards cryptocurrency, and stablecoins is a huge part of that. So very, very interesting stuff. Obviously, it doesn't solve the problem of the national debt, but I like this, and the reason is because this is somebody, Trump and those in his administration, they're willing to look at outside the box solutions. I mean, this is something that we would not have seen over the last 4 years under Biden. We wouldn't have seen this kind of solution. It would have been something as simple as, we'll just print more money, right? That was what Kamala Harris said in her response. It was like, well, we've got money machines, we can print more money. It's like, okay, that's the problem. Like that's how you want to fix inflation. It doesn't make sense, but this is a creative outside the box solution to what I would admit is a short-term problem, but also we've seen the creative outside the box solutions to longer term problems as well. And what we've seen so far with the tariffs, and I know, now it's going to go to the Supreme Court and all that. We're going to see if this federal judge can block the tariffs or not. But what we've seen is that it has spurred economic growth. It's spurred foreign investments into the American economy, and it has brought production and manufacturing back to the States, and that's going to cause an economic boom to occur. So that's where something like tariffs come into play. That's the long-term strategy, but Trump is also looking at the short term as well. Y'all let me know what you think. Give me some feedback. Maybe I missed something. Maybe I'm missing something, and I'm willing to admit it. If I'm way off on one of these items, but I love this kind of stuff. I think this is very interesting. I'm super excited to see what happens over the next few years, especially if we can get this federal judge case thrown out. That'd be nice. But we'll see. So that's it. I hope y'all have a wonderful rest of your day, and we will see you again tomorrow. Gold is not just a backup plan if the world falls apart. It's an investment opportunity that could set you up for generations. There's never really a bad time to invest in gold, but you want to make sure you have the right guide. And that is where Genesis Gold Group shines. Whether you are a first-time buyer or a seasoned investor, Their trusted expertise and competitive pricing makes them an easy choice. They offer tangible assets in case of emergencies, but they can also design the perfect IRA just for you. And they'll even cut through all that confusing red tape from the IRS. We at Filibusted love the genius design of the Prepper Bar, which breaks up into sections like a chocolate bar. But if you prefer a more high-security insured gold storage, they have that too. And unlike Fort Knox, the gold is actually there and 100% owned by you. Genesis Gold Group is a safe, simple, and convenient way to invest. Visit filibustedgold.com today for your free investment guide from Genesis Gold Group.